Welcome back. Goldman Sachs betting big on the buy now, pay later space. The bank says it will acquire fintech lender GreenSky in an all-stock deal worth $2.24 billion, the biggest fintech platform for home improvement loans. The acquisition will help further Goldman's push into consumer finance. Shares of GreenSky soaring on the news. Joining us, Jason Goldberg, Managing Director and Senior Equity Analyst from Barclays, who's also been hosting a lot of the bank execs the last couple of days at his conference. Jason, we want to get to the conference in a moment, but firstly, this deal for Goldman. Is this a huge positive? Is it, in fact, a slight negative that it suggests they hadn't been able to grow in this sort of space sufficiently organically?
No, listen, I think a few years ago, Goldman Sachs laid out a strategy to become a digital, consumer bank, and they already have, Marcus Invest. They have an unsecured lending product. They have the credit card relationship with Apple and GM upcoming. They talked about rolling out a digital checking account. And now with the addition of GreenSky, they add a point-of-sale financing partner. So they scale up that component relatively quickly with this deal. And I think over time, they have the ability, literally from scratch, to build a very large consumer digital bank, which is an attractive space.
So I know, Jason, that Goldman's one of your top picks. To what extent is that because of these new initiatives or because it's best to be in the capital markets now rather than a retail bank?
I think you get the best of the both worlds, right? At the moment, you have a pretty strong trading environment, a very robust investment banking environment with strong issuance, as well as a very, very active M&A market. And on the other hand, they have several kind of organic initiatives underway, one of which is, consumer banking, other of which around alternative, as well as, building out some of the wealth management product. So it's kind of both the current environment benefit as well as just actions to increase the revenue durability on the other side of this robust capital market cycle.
Let's talk about some of the key takeaways from your conference. I managed to listen to some of the presentations. I mean, it seems like all the banks are still very optimistic about the U.S. consumer.
Yes, no, absolutely. Right. We just wrapped up our 19th annual Global Financial Services Conference, heard from, basically every top 20 bank. And the consumer is doing quite well. You're starting to see some of the stimulus and the benefits kind of from the pandemic roll off. But the consumer still has very strong balances in their account. You're starting to see spend increase. And, credit quality is, the best we've ever seen it.
Is loan growth getting any less elusive?
Yeah, loan growth is still sluggish on the C&I front between the PPP paydowns as well as, low utilization rates and, supply chain constraints and labor shortages, still muted. But if you look at commitments and pipelines, they continue to build, which I think leads us to believe, come next year as some of these issues are put to bed, you should see loan growth accelerate.
And just pivoting back, Jason, to your top pick, to Goldman Sachs, were you surprised by the announcement that Stephen Scherr was going to be retiring at the end of the year?
Listen, he's been in that role for 3 years. It's interesting. If you look, since mid-May, so not that long ago, J.P. Morgan, Bank of America, Morgan Stanley, and now Goldman Sachs have all announced CFO changes, and that's on top of, Wells Fargo and Capital One not that long ago. So listen, it's a very high-pressure, stressful job, and it's, something that you kind of continue to see some turnover with. So, listen, Goldman has a lot of employees, very capable individuals, and we think they'll manage that transition just fine.
Jason, good to see you as always. Thanks for joining us.
Thank you, Will.